Good morning. It's Market Day Report, and welcome to almost the weekend, right? How about we check out what happened in the overnight session? And we'll start with the corn market, down a penny 3/4, 416.5. How about soybeans? Well, soybeans in the red overnight. Yesterday, you look at how we finished the session yesterday, nearly every row crop was in the red. And across the entire bean complex, we were lower. So just building on some of those losses from yesterday in the overnight session, again, down 9 on the new crop. How about soy meal contracts? Again, lower across the board. Bean oil lower, holding the 50s though, somehow holding the 50s as we start the day trade. And the wheat market, there was, let's see, Chicago was lower yesterday, lower in the overnight session. And we look at Kansas City, or hard red, it was lower as well. And then when we look at what happened at spring wheat yesterday, it did settle in higher territory, but again, lower in the overnight session. Finally, over to cotton, it was lower yesterday and down 88, 65.46. That's the March contract. But the December is the most active. And notice it's now below 64 cents. Brian Hoops, President, Midwest Market Solutions. Brian, what are we watching today?
Well, good morning, Tony. Yeah, last trading day of the week here. We thought there's going to be a little negative tone to the grain markets with the USDA offices being shut down, just because you wouldn't have those positive inputs of private export sales. You wouldn't have maybe lower yields in the supply and demand report that was supposed to come out. Harvest progress, once it usually reaches 50% or so complete, then you see a seasonal type rally unfold. And without those inputs, it was likely that we're going to drift lower in here. In fact, we have some negative news that's hitting the grain markets this morning. Now, China was on a week-long holiday, and they returned, and they promptly bought soybeans out of Brazil and Argentina, anywhere from 6 to 10 cargoes. And this is the time of year that they normally buy U.S. products. Now, President Trump has tweeted that he believes China will buy U.S. soybeans after he meets with President Xi. But again, the market's looking at that as hope, maybe wishful thinking. Hopefully that would happen, but it's several weeks away. We do have better rain chances in parts of Brazil and Argentina. They're planting corn, they're planting soybeans there, the first crop of corn in Brazil, and their better chances of rain is just what they needed. We had a little bit of a drier stretch that helped to rally corn and beans, and now we're backing off as the rains are coming. Overnight, Sovicon, that's a government agency out of Russia, they increased their estimate of the Russian winter wheat harvest. That's expected to be about 87.8 million tons, so up just over 500,000 tons from their previous numbers. But all this is just kind of negative news starting to hit the market all at once. And once, we're going into the weekend, so we'll likely see some type of weekend harvest pressure as well.
Yeah, I'm glad you threw in that Argentinian purchase as well, because that's going to be a kind of a hot topic among farmers, ranchers, and the administration. Would you agree?
It certainly is, and it's getting a lot of maybe unfair media attention right now. We had a trade agreement back in 2018, and since that time, there's been no repercussions to China not upholding that trade agreement, and so we have to renegotiate and kind of start all over. But we absolutely need some sort of trade agreement. We can't just rely on China to be good guys and buy beans from us because we have some for sale. Since that time frame in 2018, Brazil and Argentina have increased their soybean production by over 2.2 billion bushels. That's a lot of product that's going to come onto the world market. And China has stepped in and bought all these beans, as they are usually cheaper than the U.S. products because their cost of production is cheaper. Transportation costs are usually cheaper out of South America than from the United States. So it's very cost effective for China to continue to buy from South America if they possibly can. And they had bumper crops this year, so no problem with fulfilling China's needs. We need some sort of agreement here that China would start to buy U.S. soybean product and other ag products as well.
Yeah, when it comes to soybeans, 80% of global production is in 3 countries: Brazil with 40%, U.S. with 28, Argentina with 12. And oh, by the way, the 4th largest is China with 5. We'll take a break, be back with more markets. This is Market Day Report. And we'll be talking cash cattle today, but before we do, how about we talk 246.78. What is that? Well, let's go to live cattle first. And you don't see 246.78 up there. Now you see a 245.80 on the April for the high yesterday, but that was still $1.07 or so from hitting the all-time high. Yep, the all-time high for live cattle, 246.78. So we'll keep an eye on that one today. But we did see higher trade across the board for live cattle in the session on Thursday. Now, what about feeders? Feeders, 375.15. Do you see that number somewhere? Maybe the high for October? That is an all-time high, a record high for feeder cattle set yesterday. We settled at 374.17. That's up 467. Okay, enough of the trivia. 3 straight days lower for this hog market, and December at 84.45 was $1.65 lower. Brian Hoops, President, Midwest Market Solutions. Could we see more records broken today?
I think it's certainly possible we will. Follow the cash markets, and you can usually find out where the cattle and the hog markets are going to go. As far as the cash trade, very little has been developed in the Southern Plains or on a dress basis this week. We've seen in the north a little bit at 230, a little bit at 358, down a couple dollars from last week's dress trade. Just not enough to really establish a trend, and certainly nothing in the Southern Plains, but that's going to change. We're going to see some cash trade developing today. In the hog markets, we saw cash lower yesterday, about $2.50 on a national basis, and that will be reflected in that lean hog index in the upcoming days. But the cash is softening there, and you can see the futures market really under pressure. So really looking for higher cash trade in the cattle market, especially in the feeders. That's what's driving the futures higher, giving us those contract highs. Hogs are the opposite direction. Cash is a little bit softer. Futures are weakening. Wonder today if enough is enough on these feeder cattle, if we ahead of the weekend see some sort of profit taking or something that pulls us back, and we don't see these huge $3, $4, or $5 gains going into the weekend. Just once again, just on hopes and in technical buying, maybe we see some sort of little correction or a stall out in that rally today.
Well, speaking of corrections, have we seen a correction yet in precious metals, primarily gold?
It was certainly possible. We talked yesterday morning where this market was going to go, and we were higher for a while and then turned sharply lower. And these moves are very volatile, very big swinging moves, and so we were down sharply in both gold and silver yesterday. We are seeing a little recovery overnight. So sometimes in these bull markets like this, a one-day correction is sometimes all you get.
Okay, and then finally, before we wrap everything up, how about that dollar index? We've now hit 99 on the December. This is a market that's been higher 4 straight sessions. Thoughts here?
Yeah, watch that market could pull back maybe even into the 98.30 range. That's kind of the breakout on the charts that we noted. Above that area was a breakout to the upside. So it's really moved higher. Maybe it's going to have a little correction and come back and test that breakout point.
All right, Brian Hoops, President, Midwest Market Solutions. Have a great weekend. We'll keep an eye on these markets as we open up the trade in about 4 minutes.